for 7 videos, I've been teaching you where to buy, where to sell, find the zone, draw the zone, score the zone, and that's genuinely most of it. But there's a missing piece I haven't talked to you guys. And without this missing piece, you're gonna take perfectly good zones and still lose on them. It's day 8 out of 15. Let's go. Quick reset from yesterday here where we left off. We talked about strength, 2 points, time, 1 point, freshness, 2 points. Those are 5 out of 10, and those are all about the zone itself. The other 5 points now are going to be about context and profit potential. Context starts with trend. So, here's the thing I want you to get straight in your head. Supply and demand tells you where. Trend tells you when. That's it. That's the whole reason why we're doing this, okay? A zone is a location on the chart. It's a spot on the chart. But location doesn't tell you if right now it's a good time to be buying. You can find a base, you can find a beautiful demand zone there. It can be a perfect 10 out of 10, fresh zone, a quick base, gorgeous leg in, gorgeous leg out. But if the market is dumping and we're currently in a downtrend, that zone is probably just gonna get run straight through. Okay? I'll be honest. So you need to know both. You need to know where to buy and sell, and you also need to know when. That's the whole system. Now let's talk about trend. And people massively overcomplicate this one. But a trend is just the direction price is currently going, and it's probably going to keep going in that same direction. That's it. It's not a prediction. You're not guessing the future. You're describing what's already happening, and you just expect that to continue. Second thing, okay? Trend is in odds enhancers. It's not a strategy on its own, it just enhances the odds of you winning. It doesn't tell you to take a trade, it tells you whether a trade you already found is worth taking. And third, there's only 3 options, okay? We have uptrends, downtrends, or sideways trends. And I don't know isn't one of them, okay? If you can't tell, most likely it's going to be sideways, okay? Sideways, yes, it is. It can be an answer. So, let's take a look at how a trend actually moves. Price never moves in a straight line, ever. It's always in stair steps. It goes up, then it rests, then it goes up again, then it rests, okay? And the push going up, that's what we call impulsion. And that's the green boxes you can see here. That's the trend actually doing its thing, okay? And the red boxes are called the correction phase, okay? It's price pulling back, chopping around a bit, going nowhere. For a downtrend, it's identical, just flipped upside down there. The impulsions are the drops and the corrections are just the sideways action there, the little bounce, the little reversal there. And I want to spend a second on the correction, okay? Because this is what costs people money. This is where a lot of people are usually losing. So the correction is a pullback against the main direction. Uptrend, it's the down moves. Downtrend, it's the up moves there. Fine. But here's what nobody tells you. Corrections are slower. They cover less distance, meaning they have a smaller range, they travel less, but they take more time than the impulsions. So think about what that feels like when you're in a trade. Price rips up for 2 hours, okay? Then it can spend, I don't know, the next 6 hours just sideways there, grinding sideways, maybe slightly down. And then after 6 hours of sideways action, that's probably when your brain is thinking, oh yeah, this play here is over. That's when you close it. That's when it goes and it takes off again without you. So, corrections aren't reversals, they're just the trend catching its breath. Price needs to breathe, okay? So, read this any properly. You need 2 building blocks. Let's do the first one right now. The first one is a swing. A swing is just a spot where price already turned, and that's it. prior highs, prior lows. Some people call them pivots. I call them pivots as well, but it's the same thing. And notice what you're doing here. You're not predicting anything. No, you're looking backwards at where price actually stopped and reversed and putting a mark on it. That is it. That's all that trend reading is. Looking at what already happened and being honest about it. Let's take a look at a swing high first. Swing high first. A swing high is where price stopped going up and started going down. And notice something. That's usually a rally base drop RBD formation there, which means there's usually a supply zone sitting there. Everything is connected. Swings show up where zones show up because they're caused by the same thing. And now, how do you actually mark your swings, okay? And you have to be precise here. It's the high of the highest closing candle there. You find the candle that closed the highest, and then you take the high of that candle and mark it. That's it. And the swing low is the same thing upside down. Price stops falling and starts rising. Usually a drop base rally DBR demand zone there, usually sitting in that near that swing low, and you mark it at the low of the lowest closing candle. It's the same rule, just flipped. That's going to be a theme in the system that you might have noticed, right? It's two things always mirroring themselves. Okay, now let's connect the swings. Price goes from a swing low up to the next swing high, or from a swing high down to the next swing low. That's that's a move there. From one turn to the next turn, and we call that a segment. Some people say range. It's the same thing. Segment and range are the same things. So think of it like this. The swings are dots. The segments are the lines between the dots. And there's only two kinds, okay? We have the up segments, so the swing low up to the next swing high, and we have the down segments from the swing high down to the next swing low, and that's genuinely it. Every chart you have ever looked at is just these two things, okay? Alternating over and over from swing high to swing low to swing high. And now we can actually read the trend. And here's the rule. You need three segments minimum. Uptrend, higher lows and higher highs. Each pullback holds above the last one. Each push goes further than the last one, okay? Downtrend formed by lower highs and lower lows. It's the exact opposite from an uptrend, okay? And sideways, it's roughly equal highs and lows. Nobody is winning their prices basing, prices just bouncing around in a box, very balanced. And why do we have three, you may ask yourself? Well, it's because one segment tells you nothing. Price went up. Cool. What does that mean? Okay. Three is when the market actually shows you something. Three is a pattern. So here's what I want you to take away. If you can't mark three segments, you do not have a trend. You've got an opinion, okay? And an opinion isn't an odds enhancers. You need a trend with your trades, with your zones. You want to mark the swings, connect them into segments, count three of them, and then only once you do all of that, you get to say what the trend is, okay? Because the whole point of this system is that you're not guessing. Don't start guessing now just because we moved on to trend. No, keep putting in the good work. Alright, three things about today. Trends move in impulses and corrections, impulsions and corrections there. Corrections are slow and they take longer, and that's why they trick you, they fool you sometimes. You get a lot of stop outs there. And the swing is where price already turned. High of the highest close, low of the lowest close. Okay, you want to connect two swings and you've got a segment. Once you have three segments, you have a trend. That's all that today we talked about. Tomorrow, day 9, Well, you can see the skeleton now. You can see you have some type of idea what a trend looks. So tomorrow I'm gonna show you the one single price level that tells you whether buyers are still in control, and the exact moment they lose it, okay, it's when you want to stop trading in that direction. It's probably the most useful level on the whole chart, and I see very few people honestly talking about it. Very few people. We have seven more of these, and I'll see you tomorrow.